is to entail. And right off the bat, I'm going to apologize. I think we have a typo in the first sentence. This would be the county executive's 8th consecutive balanced budget that he has submitted to commission, not 7th. This is the end of his second term. So, the most important thing, obviously, to make sure we balance budgets, we avoid deficit spending. This is the 8th budget that does that. And of course, we all know that we inherited budgets that did not do that. And then on top of that, we always we always underspend our revenues. This budget does just that. We have a $2.5 million cushion in this one of expected surplus. The reason we do that, things go bump in the night. And so we want to have a little bit of a cushion. Jake is going to take you through some of the numbers. Jake and Drew are going to take you through some of the numbers, but this is roughly about a little less than 1% of the budget. We want to hit the sweet spot when it comes to a cushion, if you will, because we still need to make sure that we pay for services to the taxpayers and the residents of Wayne County. So on top of that, I think everybody knows that we are very near to substantial completion of the CJC. You can drive by right now and see that the building is pretty much set and ready to go. We're getting closer and closer. Now, what we're going to be focusing on, starting going forward is the transition. So all the things that we need to do to furnish, equip, move people into that. In this budget, we'll start to look at what that entails. Additionally, the Third Circuit Court, the funding agreement, which should be in front of you all as commissioners, probably in a month at the latest, the I's are being dotted and the T's are being crossed on that agreement. You'll see the agreement, but the numbers that are in this recommended budget reflect what we have negotiated with Third Circuit Court for our now what should be a long-term deal. That's in here as well. And last but not least, I think everyone obviously is aware of our dire need for an upgrade of our financials and accounting system and our payroll systems. We're moving to Oracle. And so this budget funds fiscal 23 and projects fiscal 24's spend on Oracle. I don't want to steal the thunder in this because again, what will be in front of you in a couple of weeks will be a contract, a status report on the project as a whole and the direction that we're going in a couple of weeks. But this budget also reflects assumptions based on what will be presented to you in a couple of weeks. And with that, I will hand it, I believe, to Drew or Jake, hand it to Jake, who will walk you through some more detailed numbers.
So looking at slide 3 of the general fund general purpose sources, first of all, my name is Jake Brower. It's a pleasure to be here as the Deputy Budget Director. But going in, you see that the sources of the general fund that are best described as the discretionary sources, general fund, general purpose, amount to about $425.7 million for the 2023 fiscal year. You'll see that the largest portion of this comes from taxes. Overall, that is a relatively stable source of revenue. Risks potentially there come from rising mortgage rates, decreasing demand, potential impacts on housing prices in the next few years, commercial property use and activities. Moving on from taxes, we look at state revenue sharing as the next largest portion. This is more sensitive to various economic conditions, sales taxes, inflation, legislative decisions. Overall, this number that we have in our budget comes from the state adopted budget and Senate fiscal agency projections derived from that. After that, the next largest source of revenue in this discretionary bucket comes from state personal property tax reimbursement, which is a legislative function for some tax changes that have occurred in the past. This has been better funded in recent years than when it was originally rolled out. And so overall, this reflects the actual revenues we've been seeing coming in over the past few years. Looking at the remaining sources of revenues, charges, fees, and fines, liquor tax, interest income, those amount to less than 10% of the discretionary revenues here. Moving into the fourth slide, looking at the GFGP revenue adjustments. You'll see this broken down by some specific categories. Under property taxes, we are seeing a $3 million growth just due to limited property tax growth over the previous year. In tax tribunal refunds, we're expecting more favorable MTT now that we're getting out of the immediate impacts of the COVID-19 pandemic in terms of tax activity. We are expecting that to go back up to more regular levels. Payment in lieu of taxes, decreasing from 500,000 to 250. That is decreasing to reflect actual results. Revenue sharing comes from state estimates, about a $6.1 million increase. Personal property tax, a $5.7 million increase to actual experience. Property transfer tax, the activity of homes being sold and resold. This is going up $2.6 million related to the real estate market. And then other GFGP revenues going up $1.1 million due to various economic factors. Overall, we're seeing $18.8 million increase over the previous adopted budget. However, we do note that this revenue growth cannot be assumed to be ongoing or reoccurring, and it is subject to various economic conditions that may come either in the current or future fiscal years. Moving on to the next slide, general fund general purpose uses. We see the opposite side of this. So how are we using the money? Notably, this is not a reflection of the entire county's budget as a whole, which totals $1.7 million, but rather the use of this discretionary funds on the previous page. You'll see that the largest portions after general fund transfers and other non-departmental uses comes from the Sheriff's Department and prosecuting attorney, followed by circuit court, health and human services, management, budget, and then other functions. Some of these functions have more dollars in restricted revenues, but that is not presented in this chart specifically. With that information, I will pass it on to Drew.
Thank you very much, Jake. I'm Drew Vandegrift, Wayne County Budget Director. It's a privilege to join you on the first day of budget hearings, and it's been said once before, but I want to give you my thanks in stereo. The success of this budget development and all of the work that has gone into the 10,000 lines that are rolled up into the appropriations that have been submitted to you, that I can only extend my thank you to all of those that have guided and advised me as I've come into this role. And those people, include, Huey Newsome, of course. Mark Abbo has guided me on many points, and I can't thank him and his staff, Terrence and Mary. Thank you so much for all that you've done to help us bring this to you. Jake did a great job explaining how our revenues are growing and where that money is going. And so if we turn to the next slide, I'd like to make a couple of points about the general philosophy of this budget. As you know, this budget expresses the priorities of Wayne County in dollars and cents, and it is incumbent on you as decision makers and on us as budget professionals to ensure that the ongoing operations of the county are met by ongoing revenues of the county. If we were to spend one-time revenues on liabilities that are forever liabilities, things like hiring or expanding staffing, that can lead to deficit spending. And so that is a lodestar that we asked ourselves at every step of this budget development process. Is this a sustainable budget? Is this a sustainable expense? And I believe that that's related to several of these bullet points. Our revenue growth is real, but we do not anticipate it to continue on this trend indefinitely. There is a business cycle, and so our projections for fiscal 23, as Jake illustrated in great detail, the GFGP revenue growth that is projected in the budget before you is about $18.8 million. But that cannot be relied upon for forever. And so we must make sure that our budgetary priorities as well as our long-term liabilities are agile enough to respond to fluctuations in both the business cycle and the resulting revenues that we will see in out years. And so as we contemplated and vetted departmental requests for new money, new budget, we had an analysis that involved, well, is this a one-time expenditure or is this a request for something that would represent a long-term liability? Because we don't want to find ourselves in a circumstance down the road where our revenues are reduced and we are unable to service the operations of the county within the revenues that we find then. So as a result of our caution, you will see budget growth in this budget, but that you generally will not see new positions, particularly when the requesting department has a large number of vacancies that exist now. We would much rather rework those vacant positions into the current needs of the department rather than add on more positions when there's already a bunch of unfilled positions. You will also see various capital expenditures, other one-time expenses that can be afforded within the revenues that we project. You will see in greater detail as we move through these budget hearings. I imagine you will see with great interest what the variance year over year is for an affected department. And so I will not specifically enumerate these projects now, but we will explain to your satisfaction the changes on the departmental level when the appropriate hearing comes. And of course, as we have in past years, we have expressly encouraged departments, not only during budget development, but all of the time, to be examining their needs as they change and to consider reworking the positions that are within a given department. We stand, the budget division as well as HR, we stand by every day to swap positions, to reclassify positions, to make adjustments to the roster within a given department. And that's a recursive theme that we are encouraging for every department director to consider. Last page, you'll see it is a summary of many of the points that have been addressed, at least in part already. We as we, the administration, as we submit this budget for your review, we recommend limiting headcount increases where possible because of vacancies. We recommend approval of certain one-time improvements. There are latent needs in the county, and growing revenues are an opportunity to address those. We feel we have done that, and we welcome conversation as the associated departments present for your benefit and query. Reoccurring obligations, again, in my mind, this might be the second most important budgetary concept after maintaining essential operations of the county. I think it's critically important that we collectively ask ourselves and confirm that our recurring expenses can be serviced with recurring revenues. I believe that to be the case in this budget. In fact, we have cushion as Huey has described. So we feel very confident about that. And it's something that I wanted to express to you right off the bat. The ERP, there are costs associated with that are budgeted in the budget for ERP. That is a developing circumstance, and I know there's going to be a specialized and dedicated presentation in the near future about ERP. But I would also recognize that in addition to costs associated with ERP, fiscal 23 is a unique year because we are paying debt service on the CJC, and we are also paying for the facilities that will be vacated as select departments move into the CJC. So we have expenses on both sides in addition to the transition costs that Huey mentioned first. And so I'm pleased to report that we have addressed within the information available to us at the time of budget development. We've anticipated those expenses and budgeted them to the best of our ability within the revenues that you see. Last bullet, I'll make a quick comment on, and certainly we'll have a robust discussion as Third Circuit Court presents. But you likely are aware that a large portion of the funding to operate Third Circuit Court, the largest and by caseload, the most voluminous court in the state of Michigan, that funding is a function of a funding agreement that you will be seeing soon. And we have made a serious effort in cooperation with the financial and budgetary experts at Third Circuit Court to reflect the contours of that funding agreement in the budget that you see now. So those, I think, are the most kinetic elements, most significant material aspects of this budget. And naturally, I am always receptive at any time to any questions, comments, or concerns that you may have.
We're losing you.
Oh, I'm sorry. Can you hear me all right, Chairwoman?
Now I can.
Oh, perhaps I was turning my head to gesticulate. I'll speak into the microphone. I guess really what I was saying is there's never a wrong time for you to reach out to me directly if you have any questions or concerns. Thank you for permitting me to make these remarks.
Thank you. Done with your presentation?
Yes, ma'am. That does conclude our presentation. Thank you for your time and attention.
Madam Chair. I just wanted to ask if you would announce, for everyone that might be tuned in, that we're holding our questions for now. That's because otherwise.
I plan to.
Okay, thanks.
Thank you for making your presentation. And since today is our first day and we're listening to your presentation and others, and we are going to start diving into the details of the proposed budget on Monday. So the public knows we're not asking questions today, but we're listening. And then we do have a public hearing that we have to do next. And then we'll move on to our next phase. Mr. Abel, if that's okay with you. Mr. Abel, do you have anything to add to this presentation? Turn your mic on, please.
Thank you. Sorry about that. No, I don't have anything to add to it. I think after the Auditor General's discussion about budget sensitive, perhaps, questions, because I do have some questions, philosophical questions about philosophy incorporated into the budget, but we can do that after the Auditor General gives her presentation.
Thank you. Madam Clerk?
Item B, discussion of the Legislative Auditor General's Budget Sensitive Report.
Can we do the public hearing now? So we don't forget. We need a motion to open the public hearing by Commissioner Baydun, supported by Commissioner Marecki to open the public hearing on this proposed budget. Anyone in the public wishing to comment in the chambers, anyone wishing to comment from the public on this particular budget? Proposed budget. Anyone on Zoom Any public comments on Zoom? Any public comments on the telephone? Do we have any emails?
No, no emails, Chair.
As we all know, this was advertised to be done today, so I entertain a motion to close the public hearing.
So moved.
Support.
Do we need a record roll call? Record roll call, please.
Commissioner Scott? Commissioner Baker McCormick?
Yes.
Commissioner Marecki?
Yes.
Commissioner Kinlaw?
Yes.
Commissioner Anderson?
Yes.
Vice Chair Bejun?
Yes.
Chair Varga?
Yes,
Motion carries.
thank you. Mr. Abbo, take us back to the next phase of today's meeting.
Yes, Madam Chair, the next presenter will be the Auditor General for her budget sensitive report.
Marcy Cora, Auditor General. First of all, I wanted to thank my staff, especially Mindy Hayner, for all the work they did in putting this budget sensitive report together, along with management and budget for their timely response to us. The OAG is pleased to provide our annual report on our review of the county's fiscal 21 annual comprehensive financial report and budget sensitive issues to the commission as it begins its fiscal year 22-23 budget deliberations. The report contains issues which could have a budgetary impact on county operations and financial position that came to our attention through not only our review of the ACFR, but other audits, consulting, and engagement reports. I'm now going to turn over to Mindy Hayner, and she'll go through the presentation.
Good afternoon. I'm Mindy Hayner. I'm a supervisory auditor in the OAG's office. As Marcy said, today we are presenting a summary of our annual consulting report on budget sensitive issues. On slide 1, the purpose and objective of our engagement is to prepare a report for the Audit and Ways and Means Committees, summarizing budget sensitive issues which may have a budgetary impact on fiscal 2023 budget hearings and beyond. The scope of our engagement included a review of not only the ACFR, the fiscal 21 ACFR, but of also other external audit reports and OAG internal audit reports for the period of May 1st, 2021 through June 30th, 2022. We forwarded our report to management and budget for review and included their commentary in our report. Each section of this presentation references the page number in the report where management comments can be found. Moving on to slide 2. The general fund fund balance increased by 46.1 million over the prior year to 261 million at 9/30/21. Of this amount, 232.7 million was unassigned. And the unassigned fund balance includes 23 million for budget stabilization, which is consistent with prior year. Included in fund balance is a 22.9 million prior period adjustment to recognize property tax revenues that were held in the undistributed tax fund at 9/30/2020. The undistributed tax fund is used by the treasurer's office to account for current tax collections and their subsequent disbursement to other governments and the county. And during the fiscal 21 external audit, Plant Moran noted that the treasurer's office had not been reconciling the tax collection activity in the undistributed tax fund. And as a result, the treasurer's office was unaware of whom those taxes were owed to. Plant Moran issued 2 financial statement audit findings on this issue. Those are 2021-7 and 2021-8 for reference. Moving on to slide 3. We would recommend that commission leadership continue to monitor the general funds balance, including any amounts allocated for budget stabilization. In addition, the commission should request the treasurer's office provide an update on the status of reconciling undistributed taxes to ensure other local governments and the county are receiving funds in a timely manner. Excuse me, moving on to slide 4. In the general fund revenues increased by 31.3 million, largely due to increased user activity and public spending resulting from economic recovery from the pandemic. There's a 1.7 million increase in property tax revenues due to slightly higher property valuations, 12.9 million increase in state sales tax revenues, 6.3 million increase, excuse me, in personal property tax recoveries from the state of Michigan, and an $8 million increase in charges for services revenue. We did note, however, that there has been no increase in service fee rates over the prior year. Expenditures increased by 41 million over the prior year due to continued efforts to deal with COVID-19 pandemic and the increased spending of COVID-19 funds, grant funds, offset by a decrease in judicial and public safety expenditures. The increased spending of COVID-19 grant funds amounted to 50.3 million. The decrease in the judicial is attributed to lower operating costs due to the shutdown of judicial operations during the year, a decrease of 1.9 million. And the 7.8 million decrease in public safety expenditures is a result of a reduction in jail operations and a decrease in the average daily inmate population. Moving on to slide 5. Commission leadership should request the administration submit an annual report analyzing the costs of delivering mandated services and proposed service fee increases as deemed necessary, and this is consistent with prior year. On slide 6, unassigned unrestricted fund deficits increased by 6 million over the prior year. The following funds reported a deficit at September 30, 2021. Community corrections for 629,000, victim witness fund 273,000, the Economic Development Corporation of $1.1 million deficit, Chapter 8 drains $1.1 million deficit, Central Services Internal Service Fund 9.4 million deficit, the Environment Internal Service Fund 2.9 million, and Buildings and Ground Maintenance of 18.3 million. 3 of the funds require a deficit elimination plan be submitted and filed with the state of Michigan. Those were Community Corrections, Economic Development Corporation, and Buildings and Ground Maintenance. For Buildings and Ground Maintenance, though, actually for the Internal Service Funds, Central Services, Environment, and Building Ground Maintenance, the deficits were due to the recording of net pension and OPEB liabilities. And in cases like this, deficit elimination plan is not required by the state. And most of the deficits will be resolved through a transfer of general fund dollars. The commission should continue requesting periodic updates on the progress of eliminating existing deficits and notification of projected or potential deficits and causing factors. Moving on to slide 7. County debt and bond ratings. During fiscal 21-24, 244.6 million of general obligation bonds were issued to refund 2010 jail bonds, 2008A capital improvement bonds, and 2009A building improvement bonds, thus reducing future debt service payments by 52.5 million. Bond ratings and outlooks improved since last year. Moody's upgraded the county to an A3 rating and changed their outlook from stable to positive. S&P upgraded the county 2 notches from a BBB+ rating to an A rating with a stable outlook. And Fitch's rating remained the same at BBB+, but revised their outlook from stable to positive. And all 3 rating agencies cited the county's sound fiscal management and successful operational restructuring, excuse me. We suggest the commission continue monitoring bond ratings and review published rating reports on the county's Michigan Investors website. Moving on to slide 8. Staffing shortages, overtime, and succession planning efforts. As many are aware, employee headcount decreased by 180 from fiscal 20 to fiscal 21 and is down another 95 as of the end of June. Only 66% of budgeted positions were filled at the end of June 2022. County overtime costs decreased slightly by $668,000 for a total of $23.2 million for fiscal 21. Actual overtime expenditures exceeded the budget by $1.6 million. A majority of the overtime costs were incurred by the sheriff's office, 60%, and attributing to that overtime is approximately 426 unfilled positions in the sheriff's office, coupled by 94% of the sheriff's office employees filed for FMLA in fiscal 21. In a recent report, the sheriff to the Committee on Public Safety, the sheriff's office reported hiring 59 new police officers throughout the year and 57 lost. In the next slide, we followed up with personnel HR on succession planning efforts. The efforts continue just at a slower pace than expected due to low staffing in the employee engagement division. And progress is highly dependent upon implementation of the new ERP. In the past, there have been talks of a comprehensive compensation analysis. Those plans to hire a third party to perform that analysis have been canceled. And according to personnel HR, internal resources will be used instead, along with a cloud-based application titled Pay Factors to review real-time data and performing market studies of comparable salaries. On slide 10, the actions associated. We all know that hiring and recruiting challenges continue across all county departments, and there's been no improvement since the pandemic. And it's widely recognized that much of the reasons for staffing shortages relate to non-competitive county salaries and subpar benefits. As a result, we suggest the commission request a detailed and comprehensive compensation analysis, including pay and benefits, for all positions within the county, starting with county mandated departments affected the most, a county-wide what-if cost analysis of improved employee health benefit provisions, development and implementation of a means to monitor reasons for voluntary employee departures if one is not already available, continued updates on the status of staffing shortages, progress of hiring initiatives and the related impact on key county initiatives and mandated services, and continued periodic updates from personnel HR on implementation progress of succession planning. Slide 11, retirement system. The retirement system through fiscal 21 is 65% funded. The county contributed $5 million in excess of the required minimum in fiscal 21. According to the actuarial valuation report, plan assets at funding value are sufficient to cover 100% of employee contributions on deposit, 70% of future benefits to present retirees and beneficiaries, with no funding available to cover employer match obligations at this time. The ratio of plan assets at market value to retiree benefit payroll is 8. That ratio means that current plan assets are available to cover approximately 8 years of retiree benefit payments, and any payments beyond that 8 years are highly dependent upon future contributions and future investment return. Last year, that ratio was 6.8, so we've seen improvement. Slide 12. In July 2017, the county, Wickers, and the Airport Authority entered into a retroactive memorandum of understanding to memorialize the airport's 10.25% share of retirement obligations for individuals employed by or retired from the airport prior to 2002, which is when the airport became an authority and assumed operational jurisdiction of DTW and Willow Run. That MOU obligated the airport to make payments totaling $22 million over a 5-year period ending September 30th, 2020, after which time the three parties were to come together to an agreement for settling any remaining unfunded portion of that liability. At September 30th, 2020, the airport authority's unfunded portion of that liability approximates $6.3 million. And the county, Wickers, and the airport have not come to an agreement on how that remaining liability will be settled. In fiscal 21, no payments were made by the airport to fund the airport's portion of that liability. We would recommend commission leadership request management's plan to resolve the outstanding obligations due from the airport for pre-2002 airport retirees. On the next slide, the delinquent tax revolving fund. The fund saw a $16.3 million increase in fund net position over the prior year. 100% of the assets totaling $315 million are pledged as collateral for repayment of the tax revenue notes. We noted a $12.6 million increase in transfers to the county general fund for fiscal 21, from $17.4 million in the prior year to $30 million fiscal 21. However, surplus transfers are expected to decline in future years. If we look at a simple analysis of the DTRF, expected future tax collections of $152.6 million are sufficient to cover more than 100% of the outstanding delinquent tax notes. This leaves over $160 million to cover any remaining obligations of the DTRF. A majority of that $160 million represents cash and investments. The commission should request the development of an agreed upon formula for calculating surplus DTRF funds that can be transferred to the general fund, with the known surplus identified prior to preparation of the annual budget, included in the annual budget, and finally transferred to the general fund for the said budget year. On the next slide, excuse me, in 2017, the treasurer and the land bank entered into an intergovernmental agreement where the treasurer will transfer certain tax reverted properties to the land bank. The land bank in turn will obtain title of those properties and demolish, manage, maintain, or market the properties in exchange for a per property amount paid by the treasurer to cover maintenance and administration costs of maintaining those properties. The 2017 IGA expired in 2020 and was renewed the same year. We noted since 2017, the land bank has recorded a combined total of $2.43 million of receipts from the treasurer for property maintenance and administration. Expenditures incurred against this amount total $1.76 million, leaving $669,000 of revenues in excess of expenditures that have not been spent by the land bank through fiscal 21. The commission should inquire what will be the disposition of excess maintenance funds that are transferred and not expended in the fiscal year, and the need for the treasurer to continue to transfer funds to the land bank at the current per property rates. The commission should also inquire of the method of transferring funds, if the method of transferring funds from the treasurer to the land bank is appropriate. In conclusion, we believe the county's financial condition is continuing to move in the right direction. Fiscal 21 saw an increase in state revenue sharing, small increases in airport parking tax and tourist excise tax revenues, continued business expansion, and lower unemployment rates, all indicating economic recovery on the horizon. The county still faces many challenges, particularly in the area of obtaining adequate staffing and employee retention necessary to fulfill obligations due to county constituents. It is our hope the commission finds the information in our report helpful in preparation of the fiscal 23 budget deliberation process. Thank you.
Thank you very much. Does this conclude your report?
This concludes our reporting. We will also be making a similar presentation, could be a little bit longer, at the Committee on Audit meeting on August 10th. What month we're in.
I know you're going to delve into it more in your
Yes.
audit committee.
And we are available to discuss any of the issues with any commissioner if they would like.
Thank you. Mr. Abel?
Thank you, Madam Chair. To the administration, our objective is to make the budget hearings as productive as possible. So I'd like to get into some questions that I specifically have in a lot of areas. One of them is wages, personnel, DTRF, roads, the ERP, CJC, to not looking, well, let me just say more looking for philosophy and objectives in the development of the budget so that we can understand how the budget was put together rather than just looking at the numbers themselves. And let's start with an easy one. Drew, and I'll address this to you again, philosophically and objective wise. I know in the past, the county had liquidity issues and there was concern about funding our pension plan. We took it from 44% funding to over 65% funding, depending on, what you deem the numbers to be. I know that we have over $100 million in assets that aren't really accounted for because we do the smoothing of assets. So I'll give you these numbers. We have assets of $1.046 billion. We've got liabilities of $1.5 billion. If we just pay the ARC of $55 million, it'll be funded in 13 years. So with all the pressing needs of Wayne County in terms of personnel, wages, roads, and other things, why are we pre-funding the pension plan by an additional $5 million?
Thank you, Mark. Drew Vandy-Grift, Wayne County Budget Director. There are always competing budgetary interests, but I can only speak for my philosophy on this. I view the pension system to be perhaps the most important financial decision that the county makes because of the scale of the trust. As you mentioned, shy of $1.1 billion that is, legally and practically reserved for the benefit of civil servants who retire. I take that very seriously, and I certainly was trained in budgetary concerns for pension systems at the state of Michigan, where they're like floor for what is north of an emergency is like 60% funded. So our pension system has experienced precipitous asset growth, capital growth during the last number of years, but we do not have enough money to honor all of the liabilities associated with retirement. We have enough money to honor about 65%. And so I philosophically, that is a high priority for me. And I do believe that an additional $5 million in addition to the actuarially determined contribution is reasonable. Certainly, there can be other perspectives on how that $5 million might be deployed, but I would recognize that the more money we get into Wickers, the greater the future capital appreciation and growth of that money will be, right? That's the magic of the system, is that when you put the money in, it's exposed to market dynamics and opportunities. And about 70% of that.
I'm sorry to interrupt. Could you
Yes.
talk into the microphone?
Okay, I'm so
Thank
sorry,
you.
Chairwoman. No, I think the $5 million is a prudent decision. Although I recognize dissenting views, But every dollar that we get into that system has the potential to grow as market appreciates. It also is exposed to market risks, of course. But over the long term, I think it's a good move to fund our pension system as quickly as we can.
I don't disagree with a lot of what you said, Drew. I mean, but again, we're not going to be fully able to make our liabilities in the pension plan until it's fully amortized, and that won't be for another 13 years. But aside from that, again, I was talking about other priorities. Last year, when we went through budget hearings, the constant theme was our inability to attract and retain personnel here. And it's the reason why we have so many budgeted positions that are unfilled. So what is, and again, this is overall philosophical. What is the overall philosophical objective of the budget in order to deal with that need of attracting and retaining employees? In regards to compensation increases and anything we can do to better attract or better retain employees?
Absolutely. So, as you know, Mark, we budget for all positions, whether they are filled or they are vacant. And that provides an opportunity for a rework that would be budget neutral. If some positions were to be closed, and then the budget that was allocated for those positions were to be redistributed amongst the remaining positions, you could imagine a scenario where real wages would increase, potentially other benefits could be discussed within the existing appropriation. You could spread it over a slightly smaller number of positions and receive a proportional increase. But since you mentioned the $5 million additional payment into Wickers, I think I have this number in front of me. We're looking at, a contribution in this budget of about $67,130,000. Every dollar that we put into Wickers will decrease our ADC in future years. And so there is a payoff for funding the pension system in addition to honoring our liabilities. And I think, Mark, that it's possible to have both of these discussions, right? I think that we can do more than.
I guess my point, Drew, is that we've all seen, I think the number right now is just north of 9% increase in inflation. And I think that as inflation grows and you recognize our inability to attract and retain employees, that it becomes more and more difficult unless we deal with that. So my question is, how have we dealt with it in this budget on a broad basis? Last year was a 3% increase, broad board across employees. What have you incorporated in this budget?
Right. So all of the increases that have been collectively bargained are reflected in this budget. So you asked kind of for an explanation of how it is developed, and I'd like to respond to that in detail. So every year as budget development begins, one of the first steps is to price our staff and to price our vacant positions. And so we have a personnel file. It's a massive Excel spreadsheet that has various properties to it that we program with the anticipated increases that are already in existing collective bargaining agreements. So many of the agreements that you know exist now and that the commission has approved are multi-year agreements that provide for step increases, percentile increases, other benefits. And it's my job to make sure that we price those for the associated staff within those represented units. We have done that. And so that is, all of those increases are in the budget right now. My comment about how there was opportunity for perhaps reducing positions that have been vacant for a long time. Those positions could be swapped in favor of budgetary slack that then could be distributed through the collective bargaining process or through a similar mechanism. So the budget that you have now, it includes all of the increases and it budgets for the 1/3 of our workforce that is vacant. And so I believe that there's opportunity within that dollar amount already for many options to be considered.
Okay, very good. Thank you, Drew. Let's talk a little bit about roads. That's always been, again, another theme, our situation and the maintenance of our roads. I noticed in this year's budget, we're talking about consuming fund balance in the amount of about $58 million. I mean, I think that that's laudable because what that means is we're investing a lot into the systems, Wayne County road systems, which will improve transportation in Wayne County, which will improve our tax base, improve our ability to create jobs. Last year, we ended up with a $6 million surplus in our roads funds when we had budgeted, again, utilizing more of our fund balance to improve our roads. Do we have the staffing in our roads department in order to achieve the level of activity that we're talking about?
That's a very important question that I do think might be better answered by the director of DPS. My hope is yes, Mark. I want to provide every budgetary opportunity for as much road improvement to be made as possible, and so that is why we have responded favorably to the departmental request, made fund balance available so that the maximum amount of road improvement can be done during the fiscal year.
Okay, let's talk a little bit about the DTRF that our Auditor General brought up. I note in this year's budget that we have a zero transfer from the DTRF to the general fund, and there was a zero transfer last year, and they had recorded a surplus. I think that there will probably be a sizable surplus, and I understand their need for some sort of a reserve for potential pending litigation in the Raffaele case. I know that both of us received an email from the treasurer several weeks ago where they're talking about a potential $30 million that may be available. Let's talk about our joint desire to make sure that there is a formula-driven determination of surplus in the treasurer's office to determine excess that can ultimately be transferred to the general fund, ultimately to deal with the priorities of the county.
I gladly agree with you on that, Mark. It certainly assists the budgetary process when we have certainty surrounding significant revenues. If we can project out with a degree of certainty what a formula would determine, that enhances my team's ability to budget those dollars. As instead, right now, I budgeted $0 for the DTRF, and again, we have a balanced budget in front of you. But that email correspondence is heartening in that there may be an opportunity perhaps through a technical amendment to change that number from 0 to perhaps the $30 million referenced.
And that would be accomplished through a technical amendment.
That would be my desire.
Okay, so we need to turn that from a soft number to a hard number.
That's exactly right.
The other thing, projects that we have in place that I believe will create significant efficiencies within Wayne County is one, the ERP, and two, the completion of the jail. Incorporated in this budget, we do not have any efficiencies associated with either of those. I mean, I know neither of them are done. I'm just confirming that.
That's absolutely true, Mark.
Because at one time there was a study, I believe it was in 2015, that suggested there may be as much as $11 to $15 million of efficiencies with a new jail. So none of that has been realized yet.
Not yet. That's right. So simply because construction is concluding, and then there's I believe a 6-month move-in period that commences following construction completion. So CJC completes, there's a 6-month move-in period, and expenses that are associated with that. I would anticipate that the most significant savings will begin to be realized once the facility is occupied, operating, and associated aging county facilities are no longer on our balance sheet. That would be a circumstance where I would imagine we would begin to see the numbers that have been predicted, but not yet. This is a year where we're paying still. We're paying for both ends, and it's an investment, right? That in the future we will have a new, modern, more efficient facility. That there will be savings, and but not during fiscal 23, at least in large part.
Excuse
Thank you.
me, the
Thank you, Drew.
CFO wants to chime in on that one.
What Drew said is exactly right. And I also, and thanks Drew for that. And thank you, Mark. These are very good questions. I also want to just make sure on the record, as far as the ERP is kind of a similar situation. We've had some growing pains, some learning pains, but the philosophy of, and this is all interconnected. I think it's very important. This is a sermon I preach to my team as well. When you talk about the inability to hire, the need to operationally reconsider how we get things done, the fact that we have to staff up, assuming an antiquated financial accounting system, payroll system, right? Drew just did a great job of explaining the rationale of us investing today so that we can have a modernized facility tomorrow. And the same thing goes for, the fact that we have the inability to hire. We need to address that, but we also need to consider that in light of the opportunities we still haven't been able to capture in terms of technology improvements, particularly when it comes to, we're managing $1.7 billion here. And the extra cost to do that with an antiquated system in terms of people, in terms of time, and in terms of money is incredible. So yes, we are going to be paying today for the CJC, and we'll see the fruits of that labor. Unfortunately, not in this budget. It's from that standpoint, we are investing. We're also investing in the ERP, and we expect to see the fruits of that work come in subsequent years as well. Thank you.
Madam Chair, that's the extent of my questions. I really just wanted to lay the foundation of where the direction and some of the questions that'll be coming when we kind of drill down on a department level as the budget hearings progress. But to Drew, thank you, and your staff, and Huey, thank you very much. Again, I think that you guys have done a laudable job preparing this budget.
Thank you very much. I wanted Mark to set the table for what is to come, to get the answers to all of the legislative auditor general's questions, suggestions that we've gone through Ways and Means prior to about most of the issues covered, and probably some more as we go along. So we start next Monday. Would you, Terrence, please give the itinerary for Monday, and there is no action required other than adjourn after that. And we start at 10 a.m. Okay, 10 a.m. lunch will be covered, and we'll go right through and work all day on Monday until we get done for that particular session. And just this item about Monday, any questions? Okay. Thank you very much for your presentation. We look forward to a robust discussion of all the departments and all that's to come for the next 7-8 meetings, and probably more. So thank you very much for everyone. And I wanted to, for the record, show that Commissioner McClark-Coleman, Commissioner Hedges, Commissioner Basham, and the chair all are not on this committee, but they also attended. I hope I didn't leave anyone else out. So thank you for your attendance. I am ready for a motion to adjourn. Been moved and supported. All in favor, say aye.